Read this. New vehicle prices top $50,000 while auto loan delinquencies keep rising. We've never seen this before. On one hand, delinquency rates on car loans are at the highest rate we've seen not in 5 years or 10 years or 20 years, but in recorded history. But on the other hand, people are buying cars and paying the highest prices we've ever seen for new cars in reported history. This is where people are scratching their heads wondering, is the car market booming or is the bubble about to burst? So let's break it down. This is where it's very valuable to understand what has happened over the last few years in the car market to understand where we are and where we might be going. Because in 2019, what was considered quote unquote normal was a new car was about $38,000 on average, and the average monthly payment on the new car was about $554 a month. Then once the pandemic hit in 2020, we had this period of shock and mania between, let's call it 2020 to 2023, where factories were shut down, inventory of cars went down, there was a chip shortage, and everybody then wanted to buy a car. This meant we had a record low amount of car inventory, and for the first time ever, we had dealerships pricing cars for thousands of dollars above MSRP. It got so crazy during this mania period that for a small period of time, cars became assets. You could buy a used car, drive it around for years, and then sell it years later with more miles for a 33% profit. Then between 2023 and 2024, this was when that adjustment period began. And we started to see the impacts of that really in 2023. And now during this period, cars started to be produced again, so car inventory finally started to go back up. But car prices did not go down. Car prices continued to stay high even though inventory was going up. And this brings us to where we are now in 2025, where the average new car is selling for over $50,000 and the average car payment on a new car is a little bit over $700 a month, which means car prices have gone up by a little bit over 31% over the course of 6 years, and monthly payments have gone up right along with it. And this is where things really start to get confusing, because we know that car prices are booming and people are still paying for these cars, but at the same time, auto delinquencies are also breaking record highs. Now, I'm going to show you a chart that's diagramming where we are with auto loan delinquencies in just a second, but this is where we are seeing a shift in the economy, where certain people are becoming wealthier and certain people are becoming poorer. This is what's called that K-shaped recovery in the article that I showed you in the beginning, which is that some people are seeing their wealth go up like this, some people are seeing their wealth go down like this. And the people that are seeing their wealth go up like this are the people that are financially savvy, the people that are investors, because unfortunately or fortunately, depending on how you look at it, our system is designed to benefit investors. And if you are not investing in money, chances are you are on the losing side of this equation, which is why it is so important. The whole purpose of this channel is to show you why it is so important to be an investor and to get you started as an investor and to help you succeed as an investor, because that's how we build wealth in this system. And unfortunately, we're never taught how to do this. That's also one of the reasons why I just put together a new investing masterclass where I'll walk you through how you can get started as an investor and find hidden investment opportunities before everybody else. And I'll show you the exact framework that my firm and I use to research investment opportunities and find the opportunities before they hit the headlines. It's a free masterclass. There's a ton of value in there. And when you register for the masterclass, you're also going to get access to Market Briefs, which is my newsletter for investors, for free as a complimentary bonus. So if you want to get the Investing Masterclass and Market Briefs all for free, all you have to do is register, and I have that link for you down in the description below. But to really understand how bad these subprime auto loan delinquencies are getting, take a look at this chart. Subprime auto loans that are 60 days or more delinquent have passed 6.4% in August 2025, which is the highest point we have ever seen in history. Now, the reason why this matters is because this has an impact on the economy, because if you go and buy a car with a subprime loan, that means number one, you're making a transaction with a car company and a lending company, and if you cannot fulfill that promise, that means somebody is going to be losing money. And we're starting now to see the impact of this. Tricolor is a subprime auto lender with billions of dollars of subprime car loans on their books, and they just declared bankruptcy in September because of all the subprime auto loan defaults. So we know that people defaulting on their subprime car loans are starting to have pains in the economy, but the question that people really have is, are we going to see pains in the broader car market? Because we are starting to see some concerns of that as well. For example, First Brands is a multi-billion-dollar auto part company, and they also just declared bankruptcy. Now, First Brands didn't say that their bankruptcy had anything to do with subprime auto loans, but this has people wondering of what pressures are being involved in the car market right now, because the car market is a big piece of our economy. Auto loans are the second largest debt category behind mortgages. So defaults here in the auto industry are going to have a trickle effect in many different parts of the economy, because if people don't pay their auto loans, that means a bank or a lender doesn't get paid, which means somebody doesn't get their salary, and that can have an impact on the economy, especially considering how big the auto loan market is. But again, how big is it, or is it really just contained to the subprime auto loan market? That's the part that we don't have the full answers to just yet. This is where we can only just infer. And what we do know is that in 2024, we saw the highest number of car repossessions that we have seen since 2009 during the Great Financial Crisis. At the same time, we know that these higher car prices are also making it more difficult for people to purchase cars, so people are getting creative. What we're seeing is that more than 1 in 5 car loans are now being issued for 7 years. Now, the wild part about a 7-year car loan is that a lot of people don't even drive their car for 7 years, which means people are going to be getting cars and then paying for their cars long after they get rid of that same car. And we can also infer that the government sees some problems in the car market because the Trump administration recently passed a new tax deduction for people to be able to write off their car interest payments. Why? Because we know that it is expensive to buy these cars, and when people have to pay so much money for their car payment, they might say no to that car. And so with this new tax deduction, the Trump administration says that you can write off up to $10,000 a year in interest payments on your taxes if you go out and finance a car that's made in the United States, which essentially means final assembly in the United States. By the way, to qualify for the tax deduction, you have to make under $100,000 a year as a single person or $200,000 a year as somebody married filing jointly on your taxes. At the same time, we could be seeing lower car loan rates coming at some point in the future because the Federal Reserve Bank has begun cutting interest rates in 2025, and there's been a lot of rumors that more interest rate cuts are coming in 2026, which should in theory make financing a car even cheaper. And this is where I want to give a little bit of financial education, because up until now I've just been talking about what's going on in the economy, but this is where I think it's a good time for me to come in and give a little bit of opinion, because the reality is financing a car is a losing transaction, and you're never going to build wealth when you're constantly spending your money on a car payment. Because what happens is if you go out and buy this new $50,000 car over the next 5 years, or I guess even 7 years now, you're going to end up paying $75,000 for the $50,000 car. And after 5 years, this $50,000 car that you purchased and paid $75,000 for is going to be worth $20,000. Why? Because cars are depreciating liabilities. So you're going to go buy this $50,000 car with interest, pay $75,000 just so you can ultimately sell it for $20,000. That is a losing transaction. This is why I am not in favor of financing cars. Instead, I would rather you go out and buy yourself a used, working condition car with cash. Because if you're going to go and buy this $50,000 new car, you got to put a down payment. You might put $8,000 down, maybe $10,000 down, maybe $12,000 down, and then you're going to pay $700 a month. How about you take that $8,000 to $12,000 down payment and go get yourself a used but good working condition Honda Accord, Toyota Corolla, Toyota Camry. Yeah, it's going to be 10, 12 years old. Yeah, it's going to have a decent amount of miles on it, but that car is going to last you the next 5 to 7 years. You're not going to have to pay the premium gas like you would on this BMW. You're going to have cheaper insurance. You're going to have cheaper maintenance. And you get to keep the $700 in your pocket every single month. And now you get to take the $700, you get to invest it, you get to save it, you get to pay down your debt, you get to build your own wealth instead of just making the car company richer. So we know there's a lot of uncertainty in the car market, and a lot of it has to do with uncertainty in the economy. We know that there's a certain population in the United States that are really struggling, which is evidenced by the growing number of subprime auto loan delinquencies and repossessions. We also know that there's a lot of easy money going around out there because people are trying to buy these cars that they can't afford with a 7-year loan, and they're financing these cars at high interest rates, and people keep doing it because, well, we want to have the nice stuff, and people feel like they can keep affording the stuff. So we have one group of people that's becoming poorer in this economy. We have one group of people that wants to look rich and that are financing a lifestyle that they can't afford, and then we have some people that are becoming incredibly wealthy in this economy. That is the K-shaped recovery. The way that you become wealthy is by becoming an investor, period. And having more money to invest is going to help you build more wealth through investments, period. Here, if you spend your time and energy just working to pay off your cars, you are never going to become wealthy. You'll look like you're rich, but you're never actually going to become wealthy, which is why I'd rather you focus your time and energy to become wealthy first. This is why it is so important for you to become an investor and understand how the game really works. Again, if you want some more resources on how you actually start investing, I have my investing masterclass for you down in the description. And if you did get value out of this video, because we are seeing a big shift happen in this car market, and it's going to be very interesting to watch what happens over the next 12 months as we start to see these things play out. Well, the best thank you is a referral. That way we can keep sharing and spreading this financial education. So if you could, please share this video with a friend, family member, colleague, or fellow investor. Thank you. Russia accused the United States of trying to devalue its $37 trillion of national debt without informing the American people. How? By using stable coins, crypto, and gold. So if you hold dollars or stable coins or have a retirement fund, you want to pay attention. Why does Russia care that the United States government has $37 trillion worth of national debt?